Hello, I'm Nadine Blaney. In this week's edition of IG Macro Intelligence, we put the spotlight on ASX-listed small caps. Well, after years in the doldrums, Australian small cap stocks are finally outperforming their larger peers. As of the final week of October, the S&P ASX Small Ordinaries Index is up roughly 20%, and the S&P ASX Small Industrials has gained 12%. In Australia, small caps are generally defined as companies with a market capitalization between $250 million and $2 billion, essentially anything outside the top 200 listed companies. ST Wong from Prime Value Asset Management says 4 factors are likely to keep driving small caps through the end of the year.
It does set up the markets quite comfortably, I guess, at least on the short term where sentiment is concerned. So it is all setting up quite positively, and in particular, the AGM results or updates on companies themselves seem slanted on the positive, Nadine.
The ASX Small Resources Index has been a standout driver of the rally, and Wong highlighted Greatland Resources as a small cap stock with potential to outperform its larger peers. While the Australian IPO market has struggled to return to pre-COVID levels, activity in the small end of the market is picking up.
It's a big burn on resources, but it's flowing through to the industrials. We're seeing like a lot of placements going on, and the IPO pipeline for the first time in probably like 3 or 4 years has opened up for some industrials.
Now, an example of that is Karma, which is preparing to list on the ASX at an issue price of $2.70 per share. The online used car retailer refurbishes and resells quality vehicles and has raised $100 million, comprised roughly of $70 million worth of new shares and $30 million from existing shareholder sell-downs. Now, Karma is not yet profitable, but Dean Fergie highlights its comparison to Carvana in the United States and also its first mover advantage in the local market. That's Carvana, you can see on your screen right now. Karma here in Australia is debuting with a market cap of around $370 million and is forecasting FY26 revenue of approximately $120 million, alongside an expected loss of about $30 million. So while small caps have outperformed large caps so far this year in Australia, the valuation gap between Australian small and large companies remains near 20-year extremes. So much of the strength, as we mentioned, has come from resources, particularly gold, but the rally has yet to fully extend to the industrial and technology sectors.
Typically, the drivers for small cap outperformance, it's measured around interest rates and the direction of interest rates, and we're now in an interest rate reduction cycle. And so it feels that all the things are set up for a good outlook for small caps over the next couple of years.
Greg Taylor from Salter Brothers highlighted Symal Group as a standout opportunity. In FY25, Symal exceeded its prospectus forecasts, delivering normalized earnings of $106.1 million and net profit of $45.7 million. Better is another small cap pick that Taylor expects will outperform in the coming years.
Real hidden gem from my perspective and not well understood. What excites us is a combination of the consolidation that's going on in the sector at the moment and the team and balance sheet of the Better business.
In recent months, Better has launched a high-stakes bid to acquire PointsBet Holdings. The move highlights the broader consolidation trend in Australia's digital wagering sector and supports Taylor's view of Better as a consolidation play with upside. Small caps continue to offer compelling opportunities supported by interest rate cuts, positive company updates from AGM season, and strong fundamentals. So from standout performers like Symal Group to Better, upcoming IPOs such as Karma and Advanced Energy Holdings, this segment is looking positive. And that is your IG Macro Intelligence for this week. We'll see you next week.